Good morning, I'm Maiki Oreta and you're watching Basis Points, where we dive deep into the numbers and the stories that drive our economy and shape our world. We begin in the United States as Republican presidential candidate Donald Trump lays out his economic vision for the country. In a speech at the New York Economic Club, the former president once again vows to slash corporate tax rates, but only for companies that manufacture domestically or within the United States. He also wants to start a sovereign wealth fund and establish low tax zones on federal land where construction firms will be encouraged to build new homes. If Trump wins the November election, he says that he also plans to establish a government efficiency commission, which will be headed by billionaire Republican Elon Musk. Trump says Musk has agreed to head this agency, which will supposedly develop plans to eliminate fraud and improper payments within 6 months. Meanwhile, U.S. President Joe Biden's son, Hunter, pleads guilty to federal tax charges, avoiding a potentially embarrassing trial that would have begun on the same day. The younger Biden is accused of failing to pay $1.4 million in taxes while spending lavishly on drugs, sex workers, and luxury items. His trial was due to start on Thursday at a Los Angeles federal court. But in a last-minute move, the younger Biden asked to enter a plea deal where he accepts the charges while maintaining his innocence. Prosecutors, however, objected to this, forcing him to simply enter a guilty plea. Biden, who faces up to 17 years in prison, is set to be sentenced in December. His father, President Joe Biden, has ruled out pardoning his son. Over in Europe, French President Emmanuel Macron appoints the European Union's former Brexit negotiator, Michel Barnier, as his new prime minister in a bid to put an end to the political paralysis gripping the nation. Barnier is tasked with forming a government after a snap election back in July resulted in a hung parliament, or where no party holds a majority. The left-wing New Popular Front Alliance came first in that runoff vote, but Macron has ruled out asking them to form a government after other parties said they would vote it down. Barnier replaces Gabriel Attal, who resigned as prime minister following the elections. Barnier has previously served in 4 cabinet positions in France. Elsewhere in Europe, Germany's economy is likely to stagnate this year after falling into a recession in 2023. That warning coming from the country's largest think tank, IFO Institute, which abandoned its previous forecast of growth at 0.4%. The group explains that while purchasing power has risen, consumption is not picking up and will in fact remain weak because households have noticeably increased their savings rate. Automaker Volkswagen's plans to shut down factories in Germany is also raising more red flags for Europe's largest economy, which is battling weak export demand. The IFO Institute points out that Germany is facing tough competition from China in terms of cars and mechanical engineering products. Here at home, the unemployment rate rises in July. Data from the Philippine Statistics Authority shows that the jobless rate climbed 4.7% from 3.1% in June. This translates to 2.38 million unemployed Filipinos for that month. The current unemployment rate is just slightly lower than the 4.9% rate recorded a year ago. The statistics agency also says that the country's employment rate declined to 95.3% in July. This compared to 96.9% in June. The Asian Development Bank, or ADB, unveils a new 6-year lending program for the Philippines, which is worth $24 billion. This will be used to boost the country's economic growth and to address challenges with respect to poverty and inequality. The ADB's country partnership strategy, which will run this year through 2029, will support human development, strengthen economic competitiveness and infrastructure while adopting environmentally friendly solutions for climate resistance. To achieve this, the ADB says that they will ramp up support to flagship infrastructure investments that will benefit low-income households and promote regional economic growth corridors. We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line. Welcome back. U.S. stocks ended mixed in choppy trading as all eyes turned to the key jobs report, which is due out tonight. The Dow Jones Industrial Average lost 0.5%. The S&P 500 shed 0.3%, while the Nasdaq went the other way, gaining 0.25%. Wall Street's main indices were mostly in the green early in the session as data showing the services sector expanding and weekly jobless claims declining eased concerns over their labor market. The risk-off sentiment, however, prevailed ahead of the release of the non-farm payrolls data, which will set the stage for the size of the Federal Reserve's looming interest rate cut. Now, trading at the Philippine Stock Exchange opened just a few minutes ago. Let's take a look at those initial figures. Right now, trading is to the downside, although marginally lower. The PSEi index is down by just 0.1% to 68.99. This as gains in the holdings, mining and oil and property counters are being offset by losses in the financials, industrial and services counters. Now, to help us make sense of these numbers, which come just after the release of the country's August inflation data, which shows that consumer price index, or the CPI, eased to 3.3%. Joining us now this morning is RCBC Treasury Group's chief economist, Michael Ricafort. He's here to help us make sense of these numbers and more. Good morning, Michael. Welcome to the show.
Hi, good morning. Good morning, Mikey, and to your viewers.
Okay, so Mike, inflation decreased to 3.3% in August from a 9-month high of 4.4% in July, a welcome development. Now, while the general consensus was for inflation to have cooled this period, the decrease was pretty unexpected. What are your thoughts about this, Mike?
True, Mike. It's a pleasant surprise to everybody because the average estimate is around 3.7 thereabouts. So now the actual figure is 3.3%, though the BSP's estimate for the month is 3.2 to 4%. So it's within the BSP's official target and estimate for the month of August. That's the slowest in 7 months. And well, this is again back to the inflation target of, well, the target range is 2 to 4%. So this is good news in the sense that, this would allow and justify further local policy rate cuts going forward as a function of Fed rate cuts. And the main catalyst for the slowdown in the inflation, well, it has been the reduced import tariffs on rice. The tariffs on imported rice effectively reduced to just 15%, meaning the import taxes from 35%. So that's an outright 20% discount on the price of imported rice. That's on top of the decline recently in the world price of rice. So therefore, because rice per se accounts for 9% of the total inflation basket. So that was the largest factor behind the slowdown in inflation. And this has been widely expected in recent months because the reduced import tariff on rice took effect early part of July. And as we see more imports of rice at reduced tariffs and at reduced world prices, so definitely, this is very much expected for the coming months, 3% levels for the rest of the year, and the likelihood that it would move towards an average of 3.5% for the full year. The year-to-date average as of August, first 8 months, is at 3.6%, also well within the inflation target of 2 to 4% by the BSP. So that's good news because, well, other factors, we have seen the stronger peso, the strongest in more than 5.5 months. Now, as of this morning, it even breached below 56, a little less than 56. Yesterday, it closed at 56.21. That's the strongest in 5.5 months. And that would mean reduced import prices and overall inflation. World oil prices just declined to new 8-month lows recently. So that would also lead to further reduction in local fuel pump prices, and that would definitely help ease further inflation down the road. So all these are positive developments.
Very
It's just a
positive
matter of
developments. Now, Mike, going back to the actual rates, the big deceleration in August inflation was due to the fact that food prices and non-alcoholic beverages within that period decreased from 6.4% in July to 3.9%. A big thing, as you mentioned, was rice. Now, given that the government has slashed rice tariffs from 35% to 15% through to 2028, barring any unforeseen circumstances, do you think this deceleration in inflation is a trend that's here to stay over the medium term, at least?
Yes, Mikey, true. This could be barring any external risk factor or geopolitical risks. There's a chance already that inflation would normalize at 3% levels in the coming months and also in the foreseeable future in the coming years. So that's for as long as it's below the 4% upper end of the inflation target of the BSP, that would still be favorable for the economy because that's conducive to sustainable economic growth and development over the longer term. Well, because this is taken into context wherein GDP growth is much faster, lately at 6.3% in the second quarter and expected to be at least 6% in the foreseeable future among the fastest growing economies. So, meaning to say, the growth of the economy and of course, GDP, that's the production of all goods and services within the borders of the country, that 6% growth is faster than the growth in prices. Meaning to say, even the growth in incomes, it's faster than the growth in prices because, of course, that's also there must also be some healthy form of inflation for as long as it's within the central bank target. That is part of a healthy economy. If the economy grows, there's some also
there's no growth without inflation. Now, just going back on the implications of this, inflation, August inflation printed 3.3%. How much latitude does that give the BSP? The BSP meets in August to talk about interest rates after the quarter point basis cut, after the basis cut of 25 last month. By how much do you think they're going to cut interest rates this time around when they meet in August?
Well, with this pleasant surprise on the inflation data, so it's even more warranted and justified to cut local rates further. Meaning to say, well, there are two more remaining BSP rate setting meetings, October 17 and on December 19. So therefore, as early as October 17, there's already an increasing chance and odds to have another 0.25 local policy rate cut on top of the 0.25 rate cut that we saw last August 15. And that brings to a total cut this year of 50 basis points or 0.5. And that has been fairly consistent with the signals of local monetary officials in recent, at least for the past 1 to 2 months. And now going forward, it would be a function of future interest rate cuts by the U.S. Central Bank or by the Federal Reserve or the Fed.
Correct. Now, Mike, we've got the latitude to cut interest rates in step with the U.S. Federal Reserve. Now, what does this mean? What does this mean for our economy? The fact that we have the latitude to slash rates in step with the United States.
Well, definitely, Mikey, that's good for meaning lower Fed rates that would set the pace around the world. Now our differential is at the lowest in our lifetimes. It's 75 basis points, meaning to say the Fed rate now is 5.5%. That's the highest in 23 years or since 2001. They have yet to cut. They're widely expected to cut September 18 there in the U.S. Then the local policy rate, the counterpart here in the Philippines, is at 6.25% after being reduced by 0.25%. So let's just say difference or a risk premium of 0.75. That's the narrowest ever. We cannot be really close to the U.S. central bank rate. well, because of the difference in the credit ratings, of course, the risk premium to give greater incentive to hold on to pesos rather than dollars from the point of view of international investors to give them incentive to do so. And therefore, it's important to maintain that healthy interest rate differential. Thus, for the coming months, if the Fed cuts rates further, well, the dot plot estimate by the Fed officials is a cut of 0.25 to 0.5 this year, and a further cut of 1.00 by 2025, and another 100 basis points by 2026. So that's a total cut of at least 2.25 percentage points from 2024 to 2026 as guided by the latest Fed dot plot. And that was updated as of June 12. Come September 18, the rate setting meeting there in the US, they're expected to update that dot plot. But consistently since December 13, the total has been the same. From 2024 to 2026, the total rate cuts would be 2.25. So therefore, going forward, to maintain the healthy interest differentials with the US, the local policy rates would likely match future cuts in the US central bank rates or in the Fed rates. So we're now that part of the cycle. We're already pivoted in that sense. 2.5 years ago, when the Russia-Ukraine war started in February 2022, when inflation went up for the past 2.5 years, so we have seen the central banks, led by the Fed, followed by other global central banks and the local central bank, also raising rates, that rate hike cycles. Now it looks like that's done and over with. They have already accomplished their mission of slowing things down by way of higher interest rates as a tool to better manage inflation. They have brought down already inflation much more closer and well anchored towards the central bank targets. And now the consequence, of course, there's a price to it in controlling inflation. The side effects or the adverse effects would be the risk of recession because it has slowed things down by way of higher interest rates and higher borrowing and financing costs. Now, when Chair Powell for the past month or two has been asked what keeps him awake at night, so his answer is any deterioration in the US jobs market, meaning to say the risk of recession. Since they have already done their job, because the primary mandate and the priority of the US central bank and other global central banks, including ours here in the Philippines, is price stability or stable prices.
Okay, Mike, we'll have to keep it at that. Thank you so much. That's all the time we have for today. Summa total, we're entering a sweet spot, and the BSP has done a great job. So thank you for your insights on that. We'll try to get you back at another interview when we've got more time. So thank you, Mike.
Yeah, thank you so much, Mike, and to your viewers. Have a pleasant morning.
That was Michael Ricafort, Chief Economist at RCBC's Treasury Group. Now we're taking a quick breather. Basis Points will be right back. Welcome back. Let's check on the business headlines in the major news websites. On Business World, local IT and business process management companies are facing a shortage of workers skilled in artificial intelligence, despite the industry's AI adoption rate hitting more than 60%. The IT and Business Process Association of the Philippines says that there are also lingering concerns about data privacy, security, and integration with legacy systems. On the Philippine Star, the Philippines may lose the South Korean market for bananas if the free trade agreement with the East Asian nation isn't ratified soon. Government officials and stakeholders in the banana industry are waiting for the Senate's ratification of the prospective free trade deal, which will reduce tariffs on Philippine bananas from the current 30% rate to 0 within 5 years from now. And on Business Mirror, Finance Secretary Ralph Recto says that consumers can expect a more pronounced reduction in rice prices as the decrease in rice tariffs makes its way into the market. This as the government has slashed rice tariffs substantially from 35% to 15% through to 2028. Japanese retail giant Seven&i is set to ask Canada's alimentation Couche-Tard to reconsider its takeover bid. Seven&i cites an inadequate offer price and concerns over competition laws in the United States as the reasons for its latest move. Seven&i's board intends to inform Couche-Tard as early as Friday that they believe that their bid does not reflect the true value of their business and their growth strategy. The Nikkei reports that Couche-Tard offered roughly 6 trillion yen, or $42 billion when it made its proposal back in July. At this rate, it's still poised to be the largest takeover of a Japanese firm. More agencies are investigating the controversial sudden uptick in ticket prices for the much-awaited reunion shows of British rock legends Oasis. Thousands of fans waited long hours in lines for tickets last weekend, only to find that prices had been hiked as part of a dynamic pricing scheme due to the high demand. The UK competition watchdog says that it will look into this issue. They stress that businesses using such complex pricing systems need to be transparent and not mislead consumers. The British government and the European Commission had also announced their own probes into Ticketmaster's use of dynamic pricing. Oasis will reunite for a 14-day tour of the UK and Ireland in July and in August of next year. And that's it for Basis Points. I'm Maiki Oreta. We'll be back next week for more news on the financial markets and more. Keep it here on BNC, the Billionario News Channel, always on top.